this topic and the next topic, we'll look at another category of alternative investment opportunities, real estate. Real estate, or property, is a very old class of assets. Property investments include both investments in residential properties and commercial properties. Individual investors normally invest in residential properties such as an apartment, a house, or a townhouse because the entry barrier to the residential property market is much lower. For example, the amount of money required is lower, the maintenance costs are lower, and also less expertise on property management and investment is required. Institutional investors mainly invest in commercial properties. Commercial properties mainly include rental apartments, office buildings, retail properties such as shopping malls, industry properties such as warehouses, and other commercial properties such as hotels and infrastructure. Commercial properties can be further categorized as core properties and non-core properties. Core properties involve less risk and generate stable income. Non-core properties are the opposite. Properties have very different characteristics to traditional financial assets of stocks and bonds in terms of their risk, return, liquidity, and investment horizon. Property is a medium risk asset class with low volatility in returns, and the performance of property is positively correlated to economic condition. However, there are some risk factors that are particular to the property asset class, and investors should carefully consider these risk factors before investing. The first risk factor is property is a very illiquid asset class with high transaction costs involved. It takes a long time to trade a property, and it is likely you will not be able to achieve the price you want to achieve, as there is often a mismatch between the price asked and the price offered in the market. The second risk factor is the supply and the demand of properties are determined by the government to a certain extent. Government can affect property price by granting or not granting development permits, changing or not changing land zoning, and policies such as stamp duty policies, interest rate decisions, and so on. The third risk factor is associated with the conflicts of interest between different parties involved in a property investment. A typical commercial property investment normally involves the owner, the tenants, and the property manager. While owner's objective is to maximize returns, the other parties may have their own objectives and may not act in the best interest of the owner, which may decrease the return or even lead to a loss to the property owner. The fourth risk factor is the change of right location over time. A property may have a good location now, but the location may not remain good after 10 years. For example, change of council plan may change the location premium of a particular area. The next risk factor is investors may have to hold an under-diversified portfolio as a result of investing in property. A property investment normally requires a large lump sum of capital and may limit an investor's ability to invest in other asset classes. The last risk factor is the unreliable valuation of properties. The valuation of properties is quite uncertain and subjective, as appraisal valuation is commonly used. Appraisers tend to refer to previous valuation when doing current valuation. It is also a common practice that only a fraction of properties in a portfolio will be revalued at a time, and the remaining properties just use the old valuation. Therefore, property price may look smoother than it really is, and the volatility of property price may be low just because of these issues in property valuation. Despite of these risk factors, property generates reasonably high returns. It has been found empirically that the real return on property is equal to its cap rate, which is essentially its net rental yield. It has also been found that capital gain yield is just equal to inflation. Therefore, property has been widely considered as a good hedge against inflation. In addition to being a good inflation hedge, another popular reason for investing in property is its diversification benefits.